we just, I think, need to think outside the box. And this isn't just young people. I think in our minds, we're kind of stuck on, gosh, if this was my kid.
Right.
But if you are trying to move up in house.
If it means you have to take a 50-year mortgage, you buying too much house.
That part right there. That's it. That's all.
Let's just call it what it is.
I wish you had a glass I could clink and cheers. Cheers on that one.
That's immediately what comes to my mind. If you are trying to step up in house and you have to take a 50-year mortgage, you're buying too much house.
Agreed. Yep.
Welcome. This is For Better and Worth,
The podcast where we don't believe you have to sacrifice your relationship while you grow and build your net worth.
We are your hosts.
I'm Chris.
And I'm Erica Young, and we're so glad you're joining us today.
All right, y'all, let's get into it. Hey, babe, how you doing?
I'm good. How are you?
I'm doing great.
I have to apologize because I'm drinking my favorite latte, chai latte. And I went one day to see my mentee, who is 9 years old. And she said, Miss Erica, did you have coffee today? And I was like, oh my gosh. Yes. She was like, girl, she said, you should have brushed your teeth. She didn't say that.
She said, did you not get any mints? You got coffee breath, Miss Erica.
So anyway, I have to apologize because you are in close proximity.
Right, you like this, so I have to apologize.
But I'm gonna be in your face anyway.
Well, thank you for joining us again. So I think this is a timely topic that we get into today.
Yeah, and you are pretty passionate, if I might say.
I think that is because, so we're going to talk about this new introduction of a 50-year mortgage. And I don't know if it's official or unofficial, but even the fact that it's a discussion point, it warrants us talking about it.
I agree.
I'm a big proponent of paying houses off. And I know financial advisors and people want to say, don't do it, but I'm like, bump all that.
Because the reason they say don't do it is because it's cheap debt, quote unquote. And it used to be cheaper than it is right now.
Yes.
Because we got a mortgage for what? 3.25?
3.5.
That's how much interest we paid. Nowadays it's twice that, or 6.5, whatever. And so I get why folks say it's cheap debt because it's cheaper than credit card debt. But I don't agree. I'm just saying.
Imagine buying a $300,000 home and paying it off in half a century.
Right, and you could live in that house and God forbid you could not pay it off and pass before you.
Right, and with interest on a 50-year mortgage, you're gonna pay for the house 3 times over.
That's crazy.
That is lunacy.
Yeah. I
get hype about it because, I don't know, people can say whatever they want to say about keeping a mortgage, not keeping a mortgage. I just think that debt and mortgage keeps you bound in a way that people cannot have freedom. Mm-hmm. And I want myself and others to be free.
Yeah.
And with freedom comes the ability to make different choices. And I think that's where people can miss out on that ability to choose something different. Like even when it comes to careers, sometimes people are locked in because they have obligations that they have to choose a path that either makes money, or they're locked in doing something where they say, well, I can't change careers now, or I can't do something that is a passion. And a passion could really become something that you're great at, that could become, a tool to create tremendous wealth for you and your family or whatever. I don't know. I'm getting kind of hyped. So.
Well, let's back up to why they're doing this. There's 2 major reasons why they're doing this. One is affordability. So I think this is a clue that interest rates are not coming down anytime soon, right? So housing affordability is tough right now. And so
and I get that.
Yeah, so with interest rates being 6.5%, 7%.
It's keeping people from getting into the home ownership market and developing that as an asset because the interest is so high.
Yeah.
And I get that. And I feel for people who, especially younger people, and I think about our kids as they're entering into their corporate careers and starting to consider, home purchases, which we talk about with them as well, that may push them out longer from being able to do that and continuing to be a renter.
So that's a reason. The other reason, let's be very clear, is the banks could see this as great, okay? Because they are going to have so much more interest. So for instance, we prefer a 15-year loan.
Yes.
And on $300,000, a $300,000 home, you're only going to pay about $150,000 in interest. And
you're only going to pay 50% of the value.
And that's still
high.
It's still heartbreaking, right?
Right. That's still a lot of money.
So you will purchase a $300,000 home, and in 15 years, you will have paid $450,000 for it.
Yep.
And hopefully, in 15 years, it will have appreciated greater than that.
That
right?
455.
Now, you go to a 50-year.
Well, no. Let's stair step.
Okay, so the traditional route. What's the traditional route for most people?
A 30-year mortgage, a $300,000 home. At the end of the day, you will have paid approximately $680,000+, $682,000. So you've actually paid double the value of the home. Mm-hmm. And again, the hope is that the value has outpaced what you've paid, so you're in the positive.
Yeah.
And that's not always the case, but 30 years, there's a high probability that will be the case.
Right.
Now, enter
the 50-year
mortgage,
which is horrifying. And you already said it, that you're going to pay 3 times as much for this house. But it is actually sickening the amount of money that you will pay. You'll pay $1 million over the course of 50 years for a $300,000 home. Oof. And that difference, that $750,000 difference, goes straight to the banks. That's their profit.
Right.
For giving you the ability to make payments.
So I could see why banks might be like, you know what, this is a good idea. We are meeting the needs of our consumer because the interest rates are high and we want people to be homeowners. But $750,000 in interest, I'm about to fall out of my chair just thinking about
literally. That. And the other thing is, it's going to take you more time to build up equity. Yes. So you're going to be paying pennies for a longer period of time in that 50-year mortgage.
20 years, you're going to just be paying interest.
I mean, it's crazy. Yeah.
I guess in 20 years, you're going to just be paying interest to get the amount down. And then you may start paying some principal. So
you better hope that it does appreciate in value because you're not paying the mortgage down in those first couple decades.
And those same people who would say don't pay it off, they would sometimes lead you to believe, well, you could take home equity, lines of credit, and do different things. But with a 50-year mortgage, I see that being a challenge, even being able to get equity lines of credit to do other things that people may suggest you should do. And I'm just like, oh my God, this is such a bad idea for so many people. And I think about, like, I have to bring it back to my world. I'd rather my kids rent instead of going into a 50-year mortgage. This is the basis, I believe, to set up the next housing crisis.
Well, this is probably the next housing crisis. You're right. I think you're right. And that's the scary part, because in 2008, when they were getting creative with mortgages, that was a disaster on many levels. And this is the newest realm of that. And honestly, it's kind of right on time, because they say every 15 to 20 years, there's going to be some type of correction or reevaluation on the affordability of home ownership.
I think I always use 2008 as my barometer I say, look, I made it. We made it through 2008. We can make it through anything.
Yeah, but we almost made it. I mean, honestly, when we bought that other house, we probably bought more than we should have. And that's...
I mean, life is about lessons.
Yeah.
Lessons learned. And it's not just lessons learned. It's wisdom that you've gained from those lessons learned.
So here's the deal. Here's the deal. I think this could potentially lead people to purchasing homes that are outside of what would be a recommended price range because they're allowing it to go longer than they ought to.
So they say, well, you know, I can afford more house now.
And that's a challenge for me. So as a coach, as a person who sees the monthly payment or the upkeep.
I gotta pause for a second because this is like, it's got my head like, I'm just like, people. I hope people who listen to this and watch this on YouTube For Better or Worse, I hope people are just like feeling where we're coming from.
The thing is though, honey, we have been homeowners for most of our relationship except for 1 year. Most of our married relationship. So I can imagine that it is something that a lot of people want to experience. And I'm not going to say at any cost, but at some cost, right?
Yeah.
They might be willing to lower their standards on how they purchase a home in order to get the home.
I would rather see someone look at this and say a 50-year mortgage is so ridiculous, but I want to be a homeowner and get creative and say, not only am I going to get out of debt, but I'm going to take a period of time and just really lock in and save and put substantial down payment down on a house. Now, I'm not saying that's easy to do.
Yeah.
But what I'm saying is that if you really want to be a homeowner, there have to be other options that you look at other than a 50-year mortgage.
Okay, so we talk about options, and I love to hear that because I think this is the prime time for people to really begin to think, how can I stair-step my way into home ownership? Mm-hmm. Maybe it's a purchase, something real inexpensive, flip it, or live in it for a year so that you can, fix it up and then sell it, or rent it out. You know what I mean? Buy something that you can with cash that's inexpensive.
You know that I've been talking to our kids about the possibility of buying like a duplex.
Right.
Where you live on one side, you rent the other side, and let the tenant, carry a big portion of the cost. Mm-hmm. So you almost live for free or for a reduced amount because you're collecting rent that goes directly towards the mortgage. So I think about that as an option. I think about, like once you have really dug in and got out of debt, then taking what you were spending on debt and saving it. Say, I'm gonna have a 5-year window where I'm just going to be, a persistent, adamant saver. Yeah. And I'm going to accumulate cash, and then I'm going to try and secure property. Sure, prices could go up, but interest rates could also go down in that time frame, just like they could go up. Mm-hmm. But I'd rather people be so locked in. If that's your goal, like sometimes it's just like persistence and a level of diligence that you have to make a decision. Yeah. And you know how I used to talk about, like, you got to have some no matter what's in life.
Yes.
And this is a no matter what. I'm not doing a 50-year mortgage.
Right. Yeah.
So I don't know. I'm like turned up. Turned up today.
I do think I get why you are turned up, because there should be no reason why you are okay spending $700,000 extra on top of what you were going to pay for a home. I mean, like that's that. And here's the deal. When I think of my children potentially being taken advantage of financially, that would be an area where I would say the banks did not fully disclose, right, the total cost of that home ownership. The other part of this is when you purchase a home, you have to be ready for all the other stuff.
Yeah, that's just a home.
You still need to be able to afford maintenance and upkeep.
Insurance and taxes.
All of it.
All those other things. But I just really feel like people have to really stop and assess who's going to really benefit from this.
Yeah.
Because I feel like this can create longer term, stress and financial toxicity in relationships and, 50-year mortgage, like we want people to have hope and see an end.
Right.
I want to see a deadline, like, 15-year mortgage. I know that's a stretch and not everybody chooses to do that, but you can see the end of that road. 50-year mortgage, if you are a young adult, let's just play this out. You're a 25-year-old buying your first house and you get a 50-year mortgage. You're going to be 75 when you're done paying.
Okay, so that's the other thing. Is for a good portion, let's call it a decade, you could be retired and still paying on this mortgage. And what is the actual likelihood that you will be in that same house? So that goes against the big picture philosophy of a 30-year mortgage being paid off by the time that you retire, because your expenses go down, or I should say your income goes down overall, and you need your expenses to go down. So it is in direct conflict. The other thing, and we've tried, I know this is outside the box because we're talking about other options, right? We've tried with our daughter to help her reduce her expenses by having a roommate. And she was unwilling. And so she had to think outside the box on her housing, which she has, and she has reduced her housing expense.
I love it because she has gotten creative and found ways, and lives in a great place. Has a great space that she lives in.
Yeah. But like maybe when you purchase a home in lieu of a 50-year mortgage, you are okay with having a roommate, renting out a room for a season.
Yeah.
You know what I mean? Like for a young person who's unmarried and they still want to be a homeowner, and that's similar to a duplex, it's just that it would be still shared space.
Right.
But being committed to doing that for a couple of years to kind of get your financial bearings and all of that could be a part of a solution. Like I think, need to think outside the box. And this isn't just young people. I think in our minds, we're kind of stuck on, gosh, if this was my kid.
Right.
But if you are trying to move up in house.
If it means you have to take a 50-year mortgage, you buying too much house.
That part right there. That's it. That's all.
Let's just call it what it is.
I wish you had a glass I could clink and cheers. Cheers on that one.
That's immediately what comes to my mind. If you are trying to step up in house, and you have to take a 50-year mortgage, you're buying too much house.
Agreed. Yep.
So you need to be like, you know what? This is not God.
Yeah. I think that is our passion around it comes from the fact that everybody knows that your biggest expense on a budget every month is your housing expense, be it rent or your mortgage. And when we think about how much that takes up. Typically, I say don't go above 35% of your take-home pay on your mortgage amount per month. And I get that it can be a stretch sometimes when you're trying to do a 15-year that affects how much you're able to spend, right?
Yeah.
But like this is the biggest thing that you pay every single month. And so you got to take it seriously.
I feel like there's already challenges with housing, depending on which part of the country that you live in. Because I remember we had a cousin who lived in California and they bought a house, but they wanted to buy a bigger house. And I remember specifically, and a lot of Californians would know what I'm talking about. They said, once you're in, you're in.
Yeah.
Like once you get a house and you're in the market because that's the toughest thing, because real estate and housing is so expensive in the state of California. And they were like, oh, we're in. So they moved a couple times, in cities in Los Angeles, the greater Los Angeles area. But they wanted a bigger house because they were expanding their family. And so they chose to move from Southern California to Northern California where they could buy more house at about the same rate as they would have in Southern California.
So that's options.
It's options, but I commend them for saying, you know what, this might change our lifestyle a little bit because we're moving to Northern NoCal versus SoCal, but we can get what we're looking for. And I think people have to be open to explore everything. If it comes down to a 50-year mortgage, all the options are on the table at that point. You have to be thinking about everything that you're going to do in order to avoid that. And, you know, I'm all about, people have heard me say, we're in the YOLO phase of life, right? So we want you to live and experience things, but this is not one of them I want you to experience.
Well, here's the other thing that I think about is when we're talking about a 50-year mortgage, we have to really think about if you're going to get a mortgage in the first place, you really ought to be in that place for at least 5 years, right?
Yeah.
And I think people who are trying to get into the market, we have to consider, do we really need to spend whatever the amount is to just get into the market?
Yeah.
Because you can get into the market. I mean, not that folks want to do this, but you can get into the market with a condo, with a fixer-upper, with a family home that is purchased at a very discounted amount, for instance, with a lot of different, you can think outside the box on this, right?
I remember growing up in the city. You know, we lived in Detroit, and my mom bought her first house, and it took a long time. She rented for a long time before she was in a position to buy. And when she bought a house that was reasonably priced, and it was not any more than she could really afford on her singular income. And she lived in that house until she, you know, went home to be with the Lord. You know, and she was able to make the mortgage and pay the rent on that house. Pay the rent. I'm saying rent.
And the taxes.
The mortgage and the taxes and insurance and all of that stuff the whole time she was there. And the house never really became an issue of contention for her. And she had that pride of ownership, and she knew this was her place and her space. And she took care of it, you know, and I was so proud that she had made that accomplishment. And she wasn't trying to buy a bigger house and move. She was totally satisfied with where she was. And I think sometimes you have to consider that as well. You need to, you know, sometimes you need to be ye satisfied.
Okay, so in saying that, when we moved to Arizona, and I had a colleague that I knew at the time who was given the advice, buy the most expensive house you can afford.
Yeah.
And when it has stayed with me since the day I entered Motorola all those years ago.
And the day you heard that statement.
The day I heard that statement. And the challenge became, in his situation in particular, I was only at Motorola/Freescale for 7 years.
Right.
And prior to me leaving, he got divorced. And
I remember.
Yes,
I remember
and
this
and so then the house was this different point of contention.
Yeah.
And so a lot of banks, a lot of lending institutions or brokers, people will say, buy as much as you can afford because you can grow into the house. And I think that is poor advice. I think it's terrible advice because you never know what's going to come. And like you said, the example with mom, it's like she got probably less than she could afford. And it never was an issue for her. In how many years did she have that house? Over 20 years.
Yeah, that was
30 years maybe.
Yeah. Yeah.
So
the house was paid for. Like,
yeah.
when she passed, there was no mortgage
Yeah.
to speak of that she had to pay. So
there it is. And so that's the whole thing, is like, don't always listen to this advice that causes you to strain your own particular finances. So I'm curious, I got this question. What do you think I mean, do you think it's possible for young people right now, and I'm only speaking to young people who are early in their career, who haven't complicated their life with marriage and kids, let's say. But do you think it's possible for them to purchase homes now?
I do.
No. With cash.
I do.
Okay.
I do. And I say that because I always have to go back to my life experiences with my children. And I have one who is a spender. Well, we have one who is a spender and one who is a saver. And I believe our saver could pay cash for a house because she's willing to sacrifice a lot of things that other people, her lifestyle is going to be simplistic. Mm-hmm. Like she's coming out of college, she's going into the work world, the workforce. I see her lifestyle as fairly simplistic.
Yeah, she doesn't actually want the big fancy home. She's gonna want something simple that she can make creative on the inside.
Her first home, I could see it being something that she finds that has character, that she can add her touches to, but she has been diligent to save for 4 or 5 years and said, all right, now I'm going to make the investment and buy a home and be willing to, rent for a season. But I think that comes with patience. And I talked about that because people become impatient. They see what others have and they want to replicate what other people have. And it's like, you have to be on your own financial journey. And for us, I think God knew what he was doing when he put us together because we were on the same page.
We were aligned for sure.
From the get-go. And though we got married, we lived in an apartment, and then we bought a home, our first home, we didn't exceed what, together our incomes could allow us to purchase.
So our first home, we were less than what we probably could have afforded. Our second home, we pushed
more than we should have bought.
We pushed the envelope there.
Yep.
And then this is our third home that we are in now that will be paid off in less than a year.
Yes.
And so we've had 3 homes. And
when we bought this home that we live in, we specifically said we are going to set a ceiling on what we were willing to purchase, the purchase price that was well below what we qualified for. And we said, nope, this is where we're going to be. And we stuck to it. Yeah. Which, when you get the house fever, when you out search, it's just like car fever. When you go searching for a car, people come back with a car.
You're right about that.
And when you go looking for houses and you start to see all these beautiful things, you're like, oh man, I want all of this. And you get the fever and the sweats and you come home and you can't think about anything else but those houses. Then you start making decisions that are not fruitful decisions.
So we also saw our oldest daughter, one of her good friends, bought a home with her husband, and they have a cute little bungalow.
Yeah, it's nice.
That they are going room by room to make their own and to update, and they have vision for, moving their bedroom upstairs and all the things.
I love it.
And I do too, because that home is small enough for them to wrap their arms around it, but they have vision for being there longer term so that it can last longer than the 5 years for them. And so
I love it because there are 2 young professionals
who are making good money,
making a great joint income. Yeah, that they probably I don't know their whole circumstance, so I'm not trying to put your business out here. We're making some assumptions here, but we know enough to know they make good money.
They're yuppies.
They're definitely some yuppies.
What is the acronym for?
Young Urban Professionals.
Okay, but that's one acronym. The other one is dual income, no kids.
Dinks.
Yeah, dinks. They are dinks.
Yeah, they're definitely dinks.
Dual income, no kids.
Dual income, no kids. Yeah, that's them for sure. But I love the fact that they found a neighborhood that's not on the low end, it's not on the high end, it's right in the sweet spot, and they have a nice little house that they're going to work on. They can put their own touches on it. They can, maintain some of the historic value of it. And I see them making it something that when they choose to upgrade at home, they will have created value because they didn't push themselves. And you know what? Here's a great point. Because they didn't put themselves in that financial bind or stress, you know what these kids did? They spent Thanksgiving in Paris.
That's amazing.
That's what I'm talking about. Give yourself options to live in the moment while you're still doing things to grow and build equity. They're not my kids, but I feel like they're my kids, and I'm so proud of them to see how they go about making these decisions.
You're Unc.
Well, you know, we already established I'm OG at this point. You know, OG.
But they gonna call you Unc though. That couple is gonna call you Unc,
right.
Because she already has a list of things for you to do.
Right.
You know,
I felt like I was daddy because she showed up like Dad, can you?
I got this list of to-do
I need
items.
This stuff done. You know, can you help us out? I was like, hold on, I need a little.
Her husband got to get a little more handy.
Right, I was like, I need a little notice that. You need me to do work when I come.
We gotta come with a hammer and some tools.
So having talked about this, we talked about some of the downsides. You know, the total interest you pay, the slow equity building, and really this is only benefiting the banks because you're gonna be in debt for a long time.
Well, but it does in fact benefit the economy. Because these purchases is moving people through and they're spending money, right? And so it is benefiting the economy. However, not all things that benefit the economy and benefit the banks are good for you. Right. And that is what we need to be thinking about, you know?
So let's talk about make it worth it. So what would you say, considering this in total, what is your make it worth it?
Mine is go slow and run your own numbers, right? So we did an example of a $300,000 home, and you know the numbers I'm speaking of are calculate your total interest. Don't just look at the monthly payment. That's how people drive off the car lot, is because they don't think about the total purchase of the car, like how much the car really costs them.
I need to be at $400.
That's all they think about. And so if that's the case, you won't look at the interest on the home in total.
We already mentioned 84-month car loans.
I know, we did. And so
already some ridiculousness there.
I get that things are more expensive, but go slow enough to make a decision that works for you, not just works for somebody else. And if you do that and you look at the total cost of this purchase, it might alter or shift the way that you make the purchase and when you make the purchase. So what would yours be?
It's funny when you were talking about that. I remember as a kid, they used to tell us to stop, look, and listen. You remember that?
Yes.
And that's what you were saying, go slow. That's the first thing that came in my mind was like, you need to stop, you need to look, and you need to listen.
Yeah.
Stop and really consider, is this the right thing to do? And then look at the numbers and look at all the aspects of what this costs means, how much interest you're going to pay, how long you're going to be in debt. And I say, listen to that inner voice that is telling you this is not a good idea.
Is that the Holy Spirit, honey?
Look, I think we have intuition.
Yes.
And we have, God leading us, but we will override all of these feelings and gut instincts and the Holy Spirit dropping out of heaven, talking to you, and go and do something anyway.
Yeah.
And I just think that sometimes people have to really, like you said, slow down and stop for a moment and give some serious thought to the decision that you're making. Because when you do that and you sleep on it and you contemplate, you might make the same decision, but then a lot of times you'll make a different decision. Yeah. And so for me, my make it worth it is really just, stop, assess what the situation is, look really deeply into the numbers, and then listen to what your instincts are telling you to do and follow that. Because
this is a form of predatory lending, in my opinion. I think that this is akin to, the subprime loans as well as interest only.
Because this just tells me, the first thing that comes to my mind is that you have to get a 50-year mortgage, then you're buying too much house.
Exactly.
You're trying to do too much. And we already had, like, think about people, like we mentioned California, the interest only loan is something that is still, I believe, going on in there just because the price of housing is so high on the West Coast that sometimes that's all people can do.
And it's other parts of the country too.
Yeah, interest only loans. Yeah, you start thinking about the East Coast and the West Coast. The coasts are really expensive in a lot of ways. So.
Yeah, I get the need for affordability, but I'm concerned about what you are then able to qualify for, right? You get to qualify for more home if it's on a longer term, and that can be problematic. And so you really have to think. I love the fact that you brought up different options, and we mentioned different options here. So my hope is that people will think outside the box on the next home purchase made if you're a young person, mid-career, or whatever it is.
Yeah.
So, yeah.
Well, I hope that people take this to heart and really listen and make decisions that are going to set you and your family up long term and not be 75 just finishing up on a mortgage.
Whoa, that's terrible. I can't.
When you do those numbers, I'm like, 70, like the average life expectancy in America is...
It's like 79,
it's like
78.
70s, 80s. So it's like, you're going to be paying for a house your whole life?
Whole life? Listen,
I'm out.
what we're not going to do.
Right. I'm out on that. So...
Well, this was good, honey.
Yeah,
so
I enjoyed this. So until next time, folks.
We're out.
Thank you for spending some of your time with us today.
We appreciate all of your support. So be sure to subscribe, rate, and review us wherever you listen to this podcast.
You can find us on Instagram at For Better and Worth.
And sign up to receive our free guide, The 7 Reasons Your Money Relationship Isn't Working with Your Partner, on forbetterandworth.com.
Until next time, we're out of here.